Welcome to the show, guys. Really glad to have you here. This is going to be your market report for Tuesday, April 10th, 2018. And now let's get on with the show. Let's get the chart started right here. First thing we're going to look at is the silver price. We have got a rising silver price. Ain't that something? It's up 9 cents today. It's on its way. It's heading up towards 17. Let's root it on. Come on, silver. Yeah. That's the green line. That's today. You can see she's going up pretty good, you know. That's not bad. That's the best we've seen in a long time. So now, Bitcoin. Bitcoin is treading water. Meaning it's really not been going anywhere lately. It's been staying in the same, roughly the same area. I tend to think that it's making a short-term bottoms. Let me see. If we go to the 4-hour here, we can see it made a bottom. It put in a bottom here at 59.20. And now it looks like it's trying to put in another bottom at somewhere around the same price. Of course, I'm talking about Bitstamp prices here. It looks like it's trying to put in a bottom at around $6,000. A second bottom. So we got a first bottom here and a second bottom. This is not unusual for a market to actually come down and make some bottoms. What you're actually seeing here is Bitcoin does this every time, you know. So if we don't see a massive drop in the stock market, we might see a tremendous surge in Bitcoin if we don't see a massive drop in the stock market. Now, why wouldn't we see a massive drop in the stock market? What it would mean is the Fed has decided to not continue with their quantitative tightening program. If the Fed decides to back off on their quantitative tightening program, then we could see a massive rise in the market rather than a fall. It all has to do with the Fed. My calls for a market crash have everything to do with the Fed's tightening program, their quantitative tightening. They started in October, November, and December, the first 3 months, with $10 billion. Then January and February and March, it was $20 billion. Now, March, April, and May, it's $30 billion. June, July, and August, it's $40 billion. September, October, and November, it's $50 billion. And they're increasing this quantitative tightening at the same time that the ECB is tapering. And the Bank of Japan is starting to cut back. They're not doing so much as they were. It's a coordinated effort by the central banks to drain liquidity out of the system. And they're not going to really stop until they get some sort of an event that stops them. Now, here's the thing. If they do stop prematurely, we could see a tremendous rise in Bitcoin, the stock market, everything will go up. The dollar will die at that point. They're doing this in support of the dollar. And it's not really helping all that much. Because if we take a look at the U.S. dollar index here, 89.62, everything they're doing is in support of the dollar. And the dollar is still very slowly losing a little bit of ground. But albeit extremely slowly. It's been sticking in around this 90 range for the longest time. That's because of all the support they're giving it by raising interest rates and reverse quantitative easing and just the whole thing. Quantitative tightening, they call it. They're increasing the speed which they're doing these things, too. They're increasing the speed of their interest rate hikes. But they can only go so far with all this. They can only raise interest rates so far because, for one thing, they're going to come up against the enormous United States debt of over $20 trillion and also $100 trillion of unfunded liabilities and over $20 trillion in just the debt alone. And they have to service that debt. And they need low interest rates to service that debt, or they can't service that debt. Plus, they got an awful lot more debt coming in. They're going to have expenditures of over $1 trillion a year coming. That's what's coming. So if we take a look at bonds and rates right now, the U.S. 10-year, this is what it all hinges on. As long as this U.S. 10-year right here, I'll bring up the larger chart, as long as this stays under 3%, I don't see us having a stock market crash as such. Now, if you notice something here, toward the end of this period here, it was rising and rising and rising and rising. It made like a crescendo, and now it's tapering back down again. It's actually started to go back down again. And this is unbelievable. I can't really understand why it would do that on the U.S. 10-year, why bond yields would be falling. I don't understand that. With the Fed doing their quantitative tightening and selling bonds into the market, I'm sure the Chinese must be selling some, being as they got this trade war going. First thing that would come to my mind would be that they want to sell U.S. Treasuries. Who's doing all the buying? It's starting to look more and more to me like the central bank is actually possibly. I'm going to go out on a limb a little bit here and say that there's a possibility that the central bank's buying them themselves, which would mean they are directly monetizing their own debt. This, of course, would not work in the end. The end result's hyperinflation if they're doing that. But we're going to have to wait and see and make sure that that's what they're doing. And, of course, if they are doing that, they're keeping it very secret. But how come if they're selling bonds into the market at the rate of $30 billion a month, how come these U.S. Treasuries the yields aren't rising? I mean, just supply and demand would indicate that these yields should be rising, and they peaked out around the middle of February, or just a little bit earlier than the March, and toward the end of February they peaked out, and they've been sloping off. Let me take a look here at the 3-month chart. And see, they peaked right here, the February 21st. 2018, they peaked at 2.94%. And if we were to draw a line across here, we'd see they're sloping down. They're going down. The yields are actually not rising. The yields are falling on the U.S. 10-year. And there's a point here where it went all the way down to 2.72. But right now, even it's still not making it back. It's almost like the stock market's falling off. As long as that's happening, we're not going to see a crash in the stock market as long as that action's happening. So I just don't know what exactly is going on with this whole thing, and I guess time's going to tell. I don't know exactly what the Fed's doing, I should say. I think that the Fed could be actually cheating, in which case, if the Fed is cheating and they're cheating big time, we won't see a stock market crash. It's just as simple as that. If the Fed's cheating big time, if they're buying all their own bonds, then we won't see it. It won't materialize. But maybe they're doing a little. I just don't know exactly what the Fed's doing. They're being underhanded somehow. Something is not matching in here correctly, because this U.S. 10-year should be starting to go up. I expected it to be around 2.95 by now, instead of 2.79. I just don't understand why that number's not rising. It needs to get up over 3% before we can have a market crash. And it's 2.79 right now. Maybe it'll rise real fast. Maybe it's going to surprise me yet. And maybe it's going to rise real fast and take me by surprise, and then we'll have our crash. But I've been keeping my eye like a hawk on this, and I don't know why it's staying down so low. It should be bond yields should be rising right now. With them coming in at $30 billion a month and no buyers, I mean, let's get real. Okay, so cryptocurrency market capitalizations. What we're looking at is $260 billion market capitalizations. Bitcoin, 44.1% dominance. Today, Litecoin is on sale. It's the only one that's down in price, down to $113. Everybody else is up a little bit. Bitcoin Cash is only up 0.29 at $639. Ethereum is up 1.3%. So we got green numbers on most of the coins except for Litecoin. Litecoin's putting in a red number. And so Litecoin is one of my favorite coins. And I think Litecoin's going to be a favorite going into this thing. Litecoin was considered to be silver against Bitcoin's gold. There's 4 times as many Litecoins out there as there are Bitcoins. So eventually Litecoin will find its way to a 1-to-4 ratio to Bitcoin, or it should. Right now it's not at a 1-to-4 ratio, not at $113. It's at what? About a 1-to-60 ratio. And it should move to a 1-to-4 ratio eventually, which means it's going to be really a bargain. Litecoin is, and right today they're a real bargain for those. Now we're going to take a look at the oil price. Crude oil is marching upwards. $1.21 up today at 64.71, but I think it'll probably be capped at around $70. I don't think it's going to go over $70 because I think production will increase. They'll all get the word out, crude oil $70, and they'll all head out there and start opening up and flooding in more crude into the market. In the short term. In the long term, they're going to run out of cheap crude. And crude prices are going to go up a lot higher, substantially higher in the coming years. But that's down the road. That's not right now. It's down the road that's coming. Let's see, is there anything we haven't covered here? It looks like we've covered everything. So I guess this is your market report for today. Thank you for tuning in, and we'll catch you in the next episode. Bye-bye.